Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in Dubai, and these are the stories that set your agenda. Asia stocks rise ahead of this week's Jackson Hole Central Bank gathering, where Jerome Powell is expected to confirm Fed rate cuts are on the cards. Israel and Hamas trade blame for impeding a ceasefire deal. US Secretary of State Antony Blinken presses for agreement, meeting Benjamin Netanyahu later today. Plus, the International Atomic Energy Agency warns safety at a Russian-occupied nuclear plant in southern Ukraine is worsening after a drone strike. This as Kyiv continues its incursion into the Kursk region. Well, a very good morning. Welcome to Daybreak Europe. Happy Monday. And it is Jackson Hole week. I hope you've got your cowboy hat because we're off to the mountains of Wyoming. We're expecting some Fed speak from Jerome Powell on Friday, but not potentially the clarity that traders would like to see when it comes to the size of a potential rate cut in September. We would like to know whether it would be 50 basis points or 25 basis points, but perhaps traders will have to be satisfied with a signal that a cut is coming. That August jobs report, of course, will give us more indication as to the size of the cut. But we're also going to hear from the Bank of England's Andrew Bailey on Friday and the ECB's chief economist, Philip Lane, on Saturday. And in the meantime, of course, we'll get the FOMC minutes for July on Wednesday, as well as the fresh figures on US housing demand and weekly jobless claims. So just checking in on these markets, you've got futures pointing higher for Euro Stoxx 50 futures, lower for the FTSE 100, but broadly flat to the upside stateside. Last week, of course, it was stock's best week of the year so far, the best 7-day rally since October 2022, which means that at the moment, good news is good news again because of these hopes of a soft landing being rekindled. Goldman cutting the risk of recession from 25% to 20%. If we flip over the board to the cross-asset picture, you're looking at the 10-year US Treasury yield steady at 3.8%. Mind the yen. We're trading at 146 per dollar currently. It's jumped 1% amid this broad weakness in the US currency. We're also looking at gold flirting there with an all-time high on these hopes of Fed cuts. And Brent just shy of $80 a barrel as traders monitor the developments here in the Middle East and in Ukraine as well. We await that Gaza ceasefire. We await a potential Iran retaliation. And given it's a relatively lean week for data, you could see politics and geopolitics really dominating sentiment. But let's get over to Asia now. Avril Hong can give us more info on that yen move and what else is happening in Asia markets. Avril, over to you.
Yeah, Lizzie, we're seeing Asia stock gauge actually extending the gains from Friday, and this is helped along by the surge that we're seeing among some of the Chinese tech names. There is a bit more risk on, a bit more appetite for such assets as the recession fears ease. We're also seeing that weakness in the dollar that's pulling the Hang Seng along with it, but the outlier is what we're seeing among Japanese equities as the yen rebounds. Look at how the Nikkei, it started the day pretty flat, and then those losses just accelerated as the session progressed. Let's flip the board and take a look at what we're seeing in terms of FX, the yen, as you say. Now, coming into this week, we were already seeing the Japanese bond traders becoming a bit more cautious because at the end of the week, don't forget, we have Ueda appearing before Parliament. Data on Japan inflation coming out before that could maybe reinforce a potentially hawkish stance from the governor, and that is keeping those bond traders cautious. The yields are creeping up. That's narrowing the yield differential, and that's fueling what you see on the dollar-yen moves. We are seeing it at the lowest level in about 2 weeks, and the yen actually moved about 1% earlier on in the session. The selling in the dollar is also helping some of these other Asia EM currencies. Let's flip the board and take a closer look at what we're seeing in terms of positioning by hedge funds as well, because for the first time in about 3.5 years, they're turning bullish on the Japanese currency. They have net long positions on the yen, something to consider as we keep an eye out for the BOJ and, of course, Jackson Hole this week. Lizzie.
April Hong in Singapore, we thank you. And let's continue that preview of the Jackson Hole meeting. Traders really looking for fresh clues on central bank thinking. As you say, Jerome Powell expected to confirm that a cut is on the cards in September and perhaps further out as well. Let's bring in our MLive strategist, Mark Cranfield, now for more. Mark, we've got traders thirsty for cuts. What's Powell got to do to satisfy their expectations?
Yeah, not an easy job for the chairman this week. He has to thread the needle where he needs to satisfy the immediate demands, that is to say, make it pretty clear that there's going to be a rate cut in September, probably of 25 basis points. And yet somehow he doesn't want to encourage them too much about the number of rate cuts which are priced into the market for the next year and a half or so. So traders, if you look at the derivative curve, they're pretty much pricing in rate cuts at every Fed meeting right through the middle of next year, almost to the end of next year. Now, that's not a comfortable position for the Federal Reserve at all, because there's way too much data to come then, and they can barely see ahead beyond the next couple of months. So they certainly don't want to endorse rate cuts for too long, but they don't want to cause a stir in the market when there is so much money has been priced into the Treasury curve, into the derivative curves. The risk of them causing a disruption in the market by not doing anything at all, or for sounding a bit hawkish, would be way too much. So they're far too sensible and experienced to be doing that. So it's a very fine game here where Mr. Powell has to try and satisfy the immediate market concerns, at the same time try and modify expectations a little bit, that he wants to see a lot more data without committing to another 100 basis points of rate cuts, probably one more after September this year, but he'll want to try and keep it open-ended. And he'll be hoping that's enough not to cause a big fracture in the equity market especially.
OK, so a difficult balancing act when it comes to the comms for Jay Powell at Jackson Hole. We've also had Goldman changing their expectations of a recession out of the US, the risks more broadly changing after the data last week. I wonder what investors are going to be watching in the near term, putting Jackson Hole aside.
Well, I don't think that traders are really taking too much about these recession projections. I think they're taking it with a big pinch of salt, frankly. If you think of what's happened just in the past 2 weeks, Goldman Sachs themselves have gone from 15% to 20%, up to 25 and now back to 20. JP Morgan is looking for a 35% chance of US recession. And I'm sure there are several other economists looking for equally high numbers on the risk of recession. So traders themselves will discount most of that, and they'll look at the actual data that is coming in front of them. The biggest factor for traders is the US employment report. That is the thing which has deteriorated and changed the most in the past couple of months, is when the US employment jobs number jumped to 4.3%. That was a surprise to many. We have one more report in the first week of September before the Fed sit down. That is going to be the biggest report for bond traders, currency traders, equity traders. If we see, currently is a bit early for forecast, but there are one or two people who think that number will come down to 4.2. The Fed would be very relieved if that is the outcome, because that would suggest a soft landing is still in place. If we get a jump from 4.3 to a higher number, people will then start saying there's a risk of a hard landing in the US, and the 50 basis points will have to go back on the table. Clearly, whatever else comes out in the next few weeks, the jobs numbers in the first week of September are way more important than what economists think about the recession odds.
All right, Mark Cranfield, our MLive strategist, we thank you. With a preview of some of the things traders should be watching over the next few weeks. And of course, one of those is the geopolitical situation here in the Middle East. Israel and Hamas blaming each other for impeding a ceasefire and hostage deal. This as Antony Blinken arrived in Tel Aviv to press for that agreement. The US Secretary of State on his 9th visit to the region since the war broke out last October. He's set to meet with Israeli officials before travelling on to Egypt. And let's bring in Dan Williams in Tel Aviv for more on the story. Dan, what are the sticking points in the ceasefire talks? We keep waiting for a deal, none yet forthcoming.
We do indeed, and to judge from a Hamas statement issued last night, slap bang in the middle of what were meant to be pivotal meetings at the end of last week in Doha and toward the end of this week in Cairo, it would appear from that Hamas statement that we really are pretty much at square one. The most salient, the most immediate sticking points cited by both sides are over the fate of two strategic corridors in the Gaza Strip. Israel wants to keep its forces, its troops in those, saying that this is what is needed to prevent arms smuggling to Hamas. to prevent Hamas moving to the northern Gaza Strip. Hamas wants a total withdrawal of Israeli troops as part of this proposed ceasefire. And really, this points to a far deeper dispute, a dispute that has been with these talks from the outset, which is over the endgame. Now, a ceasefire is by definition temporary, and Israel has said as soon as this ceasefire expires, this one is agreed, Israel will continue its fight to dismantle and disarm Hamas. Hamas, however, wants the ceasefire to be the end of the Israeli offensive against it. It wants it to be the beginning of a recovery of the Gaza Strip with Hamas still in charge. It's very hard to see how that sustained, enduring gap can be bridged, though, of course, the Americans really are mustering a big effort by sending their top diplomat out here. And there has been evidence that the Americans and the two Arab mediator countries, Qatar and Egypt, are really reading off the same page as they try to push the sides towards some kind of deal that would wind down this war before it hits the 11th month mark.
But despite those talks going on, you've had cross-border fire between the Israel Defense Forces and Hezbollah intensifying. You've had total blackout in Lebanon. Do you want to just bring us up to date on the latest on Israel's northern border?
Well, the blackout in Lebanon would appear on the face of it to be tied with the parlous economic situation in that country. There have been power cuts before, including before this war, but it certainly contributes to Lebanese misery and concern over what appears to be an escalation vector, a serious escalation vector in the south between Hezbollah and Israel. Now, the region has been bracing for a threatened Hezbollah escalation of attacks on Israel, perhaps in concert with Iran, since those countries blamed Israel for a back-to-back assassination of top militants in Beirut and Tehran just a couple weeks ago. What we're seeing now is a drumroll of fire, of exchanges of fire, between Israel and Hezbollah. However, these would appear to be within the unwritten rules of engagement between those two, meaning not as far north as Beirut, not as far south as Haifa in northern Israel. So for now, this would appear to be more of what we've seen going on 10 months now between Israel and Hezbollah. But of course, all it takes is a major strike that inflicts more casualties than intended, perhaps a rocket overshooting, to really tip the region into escalation that could bring in other countries, including potentially Iran itself.
OK, Dan Williams in Tel Aviv, we thank you for the update as we continue to monitor the situation here in the Middle East. Looking at Brent, currently trading just shy of $80 a barrel, weaker 0.3% at $79.45. We've got plenty else on the docket this week, and it's not just the geopolitics, it's not just Jackson Hole. We've got today the Democratic National Convention kicking off in Chicago. We had Kamala Harris's economic plan out on Friday. This now the chance for the Vice President to really boost her momentum and open up that poll gap over Donald Trump. We also have on Tuesday China's loan prime rate, the expectation being that lenders will keep their LPRs unchanged after cuts in July. And then on Friday, Wyoming, get your cowboy hat. We will hear from Jay Powell at Jackson Hole. There's all of that previewed in the Daybreak newsletter this morning, and today they are focusing on Jackson Hole and the stock picture building up to it. They have the Fed's Mary Daly saying that she's more confident inflation is under control, that interview from the Financial Times. They also have the latest on the Gaza ceasefire talks, as we were discussing with Dan Williams. So get a cup of coffee, tune in to the Daybreak newsletter. Terminal subscribers can go to DAYB Go. Coming up next on the programme, warnings over safety at a Russian-occupied nuclear plant in southern Ukraine after a drone strike there. This is Kyiv continues its incursion into Kursk, and we'll bring you all the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It is 6:16 a.m. in London to some top stories making news around the world. African countries are struggling to secure enough money to fight the MPOX outbreak in the Democratic Republic of Congo. The Africa Centres for Disease Control believes $4 billion is needed to help stop the spread of the disease. The WHO, the African Union and the Gavi Vaccine Alliance have only pledged about $500 million so far. The Congolese government has recorded 550 deaths and more than 15,000 MPOX cases this year. In other news, Britain's prospective home buyers stepped up their search for property after the Bank of England's first reduction in interest rates since the start of the pandemic. According to property website Rightmove, estate agents have seen a 19% jump in people contacting them about homes for sale so far this month, compared with the same period last year. Staying in the UK, companies stepped up advertising for jobs for the first time this year in a sign of the UK labour market. According to data from Adzuna, vacancies rose 1.1% in July, the job search site saying it's the most competitive market for hiring since the country was emerging from COVID lockdowns in May 2021. Elsewhere, Elon Musk's social media platform X is closing its operations in Brazil while keeping the service available there. The move marks an escalation in its fight with a Brazilian Supreme Court judge who's cracking down on fake news and hate speech. X says the judge threatened its legal representative with arrest for refusing to shut down certain accounts. And Porsche has agreed to become a shareholder in Varta, providing fresh cash to the embattled German battery maker as part of a debt restructuring deal with lenders. Under the plan, the maker of the electric-powered Taycan sports car and its majority owner, Michael Tojner, are set to each hold around 32% of Varta after participating in a €60 million capital increase. Well, those are some of our top stories from around the world. Just checking in as well on steel here, because we have had the world's biggest steel producer sounding the alarm about an industry crisis in China. Of course, China is king when it comes to steel. It produces more than 1 billion tonnes a year, well over half the world's output. So when China wobbles, so does the rest of the world. And you've had the China Baowu Steel Group chair saying that conditions in the sector are like a, quote, harsh winter that will be longer, colder and more difficult to endure than expected. It was the subject of a big take on the terminal over the weekend. I really do recommend a read of that. And as you can see here, China's steel margins really under pressure. The price of hot-rolled steel against the raw iron ore price now turning negative. We'll have plenty more on the programme for you. We'll bring you the latest on the war in Ukraine next. So stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the International Atomic Energy Agency says safety at a Russian-occupied nuclear power plant in southern Ukraine is deteriorating. That's after a drone strike on Saturday exploded about 100 metres from the plant's only remaining power supply line. For more, we can bring in Bloomberg's Tony Halpin. Do we have any clarity, Tony, on Ukraine's objectives here?
Well, I mean, Ukraine and Russia have been sparring over this nuclear power plant practically since the beginning of the invasion. It's Europe's biggest nuclear power plant, so what goes on there is a matter of extreme concern to the International Atomic Energy Agency. And as you said, they've raised the alarm again this time because of the drone attack that took place there near the power line. And the director of the IAEA, Rafael Grossi, is calling on all sides to show restraint. And he says he's extremely concerned about what's going on there.
And you've had Ukraine saying it's destroyed a second Russian bridge. I wonder how Russia's dealing with this shock incursion from Ukraine. Of course, we reported before the embarrassment to Putin.
Yeah, there's a degree of denial going on, actually. President Putin is in Azerbaijan today, acting as if nothing's really going on in Kursk region. And if you look at state television in Russia, it very much focuses on kind of humanitarian aid that's being provided to people who are fleeing their homes, rather than the fact that the country is being invaded for the first time in 80 years. And the Russian Defense Ministry issues regular and repeated announcements that it's driving back Ukrainian forces, but events on the ground seem to contradict them at the moment.
Yeah, interesting to see they're kind of treating it as a natural disaster rather than an invasion. I also thought it was interesting that Germany's no longer going to grant new aid requests for Ukraine because its own government is trying to tighten its belt. What's that going to mean for the conflict?
Yes, I mean, it's important, I think, to underline that this is about new additional requests for help from Germany. Germany's saying straight away that, it's continuing to provide aid to Ukraine. It's the second biggest donor, I think, after the US. And so the immediate impact isn't going to be of concern for Ukraine. But longer term, of course, they're going to be worried that when they make requests for military assistance, that they might not get what they want. And that clearly will be a concern if that accumulates over time.
OK, Bloomberg's Tony Halpern, we thank you as we continue to monitor the situation in Ukraine. We've had the former US National Security Advisor John Bolton saying that the peace process between Israel and Hamas has a long way to go. So continuing the geopolitical theme, let's hear from him on Bloomberg Surveillance.
There is a regional war in the Middle East now of Iran against Israel on 5 fronts. Hezbollah from Lebanon, Hamas in the Gaza Strip, the Houthis that have closed the Suez Canal, Red Sea passage, one of the most important commercial shipping channels in the world, closed effectively since October. The Shia militia in Iraq and Syria that have been attacking American positions, and Iran itself. And the question is, how do they dial up one or the other? Israel does fear Hezbollah's arsenal, which in public estimates, this is an extraordinary number, but public estimates are that Hezbollah has between 120 and 150,000 missiles, which would obviously be enough to overwhelm Israel's air defenses, and leads to the question, if they really think it's about to happen, might not Israel strike first? It's complicated. It's not mistakes. It's the fact that the leadership in Tehran is determined to destroy the little Satan. That's what's at work here.
Ambassador Bolton, yesterday we heard from former President Donald Trump, who you worked for. He said, I'm not looking to be bad to Iran. We're going to be friendly, I hope, with Iran. Maybe, but maybe not. But we're going to be friendly, I hope. We're going to be friendly. Do you know what Trump 2.0's policy towards Iran potentially will look like?
Look, he has no idea what it will look like. People who look at what happened in the first term and believe that it'll be the same in the second term, I think are mistaken. It's always possible. But remember, Trump almost met with Iran's then Foreign Minister, Javad Zarif, at the Biarritz G7 summit in August of 2019. Emmanuel Macron, the president of France, had Zarif in a villa in Biarritz, almost persuaded Trump to do it. The attraction to Donald Trump of making a deal with anybody is hard to quantify. It really goes off the charts. And it could be the same way in a second term. And that's why I think there's a certain amount of pressure on the Israelis, if they're going to do something, to do it now rather than to wait for the uncertainty of the American election.
Former US National Security Advisor John Bolton there. And I just want to take you to a couple of charts on US politics as we start this new week. You've got the DNC kicking off in Chicago. Kamala Harris really leading Donald Trump in the polls at the moment. You can see her blue line overtaking Donald Trump's red line there. Trump been trying to blame Harris for high inflation under Joe Biden and also resorting to personal attacks. He says that she has the, quote, laugh of a lunatic, but that approach rattling some Republicans. You can see how the polls are reacting. Interesting also to watch the fundraising figures. If we flip over, there have been surges with Harris and Tim Walz being added to the tickets. Can they maintain that momentum in Chicago? This really Harris's moment to introduce herself to the country. We've had more presidential conventions in Chicago than any other city, and yet Chicago police really ramping up security. There have been fears about the strain on trains and buses, so we'll keep an eye on how they handle it. And we'll preview it next with Vonnie Quinn out of Washington. So stay with us for that conversation as futures do point slightly lower in the US. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in Dubai, and these are the stories that set your agenda. Asia stocks rise ahead of this week's Jackson Hole Central Bank gathering, where Jerome Powell is expected to confirm that Fed rate cuts are on the cards. Israel and Hamas trade blame for impeding a ceasefire deal. US Secretary of State Antony Blinken presses for an agreement, meeting Benjamin Netanyahu later today. Plus, a turbocharged week for the US presidential race as Kamala Harris tours battleground states ahead of the Democratic convention. Donald Trump plans a visit to the border and a blitz of rallies himself. Well, a very good morning and welcome to a new week. Happy Monday. And it was good news equaling good news last week for markets. We've got another big week coming up. Jackson Hole is where we're headed. Wyoming's mountains, where traders hope for clarity on the pace of Fed cuts when Jay Powell speaks on Friday. But I dare say they'll be disappointed. Indeed, they may have to be satisfied with just a signal that a cut is coming. The August jobs report will give us perhaps more clarity as to the size of that cut, as Mark Cranfield was telling us before. But we'll also hear from the Bank of England's Andrew Bailey on Friday and the ECB's chief economist Philip Lane on Saturday. In the meantime, we'll get the FOMC minutes from July on Wednesday, as well as fresh figures on US housing demand and weekly jobless claims. So as we kick off the week, we're looking at futures pointing lower on both sides of the pond. Goldman having cut the risk of recession from 25% to 20%. But will we see the encouragement continuing in the market later today? Doesn't look like it as yet, but pretty flat there on the futures picture. If we flip over to the cross-asset story, you've got the 10-year US Treasury yield lower a basis point at 3.8%. The yen now trading at 145 per dollar because we have seen it jumping 1% amid this broad weakness on the greenback. We've got gold flirting with an all-time high on hopes of those Fed cuts, but Brent there shy of $80 a barrel as traders monitor these developments in Ukraine, as we were just discussing with Tony Halpin, and in the Middle East, as we were discussing with Dan Williams. We await a Gaza ceasefire deal and we await an Iranian retaliation. Do we see the politics and geopolitics dominating sentiment, given it's a lean week for eco data out of the US? It's not a small week, though, for the politics, and we can look ahead now to the DNC. We are kicking that off in Chicago later today. And speaking in Pennsylvania over the weekend, Kamala Harris was not pulling any punches about the battle ahead.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. You know, when you know what you stand for, you know what to fight for.
However, Republican Senator Lindsey Graham was less than impressed, questioning Harris's economic policy.
She's going to the Soviet Union playbook to lower prices called price control. She wants to eliminate private health care. She's for reparations. She's against fracking. She's for the Green New Deal. On and on and on. So I would make it about policy. A nightmare for Harris is to defend her policy choices.
For more on this, let's bring in Bloomberg's Vonnie Quinn. And Vonnie, I wonder what the Democrats are hoping to achieve this week. We've already shown the poll lead for Kamala Harris, the fundraising story continuing as well.
More of the same, I think, Lizzie. It's obvious that, you know, when you have a Democratic National Convention and 50,000 people attend, they're mostly going to be Democrats and probably registered voters, right? So what they would love is if some of the messaging percolated out and convinced some of those as yet unpersuaded voters, potentially unregistered voters, to actually get out and vote. This is why we got the economic policy on Friday, at least some of what Kamala Harris is pledging to do. And it's why we have a stellar lineup of guests, from Joe Biden on Monday evening to the Clintons to the Obamas Tuesday evening. Finally, then Harris will take the nomination formally and give the keynote address Thursday. So more of that. And also, there's obviously a lot of events planned around this as well, a lot of fundraising events. The campaign, the Harris campaign, has pledged $370 million between Labor Day and the Election Day in advertising spending. It's going to want to keep that fundraising going.
What about on the Republican side? You heard Senator Lindsey Graham there. He's echoed what Trump has said his staff is telling him. Stay away from the personal tax. Focus on the policy. Don't talk about her laugh and her looks. Do you think that actually this is going to win over voters to the Republican ticket?
Well, it's hilarious that you say that, Lizzie, because it's, you know, very questionable as to whether that will actually win over voters that are MAGA voters, that are Donald Trump's voters. And it sort of points to one very interesting thing, and that is that Donald Trump doesn't seem to have unified the Republican Party, particularly when you contrast that with the Democratic Party these days, which appears particularly unified. So Trump is complaining about what his aides are telling him, and at the same time you've the likes of Senator Lindsey Graham on the Sunday show saying he has to attack her on policy. Now, make no mistake, he is also attacking her on policy, and he is planning a blitz of interviews and news conferences and swing state visits and so on in order to do just that this week while the DNC is ongoing. It will all culminate on Thursday when he visits the border, which is one of the areas that Harris has considered particularly weak, at the Arizona border in this case. Trump will be there while Kamala Harris is actually accepting the nomination. Now, interestingly, Sunday we got word from the New York Times and Siena that their latest polling showed that Harris was actually leading Trump in Arizona by 5 percentage points, 50% to 45%, really within the margin of error, but it is directionally significant. And we are seeing this in many of the swing states.
And just talk to us about the prep that's going on in Chicago. Of course, they've ramped up security. It's not Chicago's first rodeo when it comes to a presidential convention.
Absolutely. There's going to be protesters. We know that. There have been discussions between protesters and the city and the police as to how much they can protest, where they can protest, what they can have at their disposal. For example, a stage, loudspeaker systems and so on. Pro-Palestinian supporters, for the most part, they are planning to demonstrate outside the Israeli consulate Tuesday night. There is a huge march planned as well. No doubt there will be other types of protests too. So Chicago is prepared. Obviously, it has that past with the Vietnam protests and in 2020, the George Floyd murder protests and so on. But, the police chief has said he's not going to take any disruptive behavior, and there are going to be extra police on the ground in Chicago. Many of them will have been at the RNC in previous weeks. And, of course, Chicago will, continue on. But hilariously, some kids aren't going to go back to school until after the DNC. They have put off the date for the beginning of the school year because there are going to be so many people descending on Chicago.
All right, live from Washington, Vonnie Quinn, we thank you for the update on the US politics. And we're going to stay with it and join Stephen Brown, who's the Deputy Chief North America Economist at Capital Economics. He's been listening to Kamala Harris's first announcement of her economic policy on Friday. Stephen, welcome to the programme. I wonder what you made of these initial announcements. We heard what would effectively be price controls on groceries. Do you think that that'll add to inflation in the US?
Yes, I mean, she did lay out a few different policy proposals on Friday. I think price controls for us is probably one of the more minor ones, not least because we think she'd have a really tough time getting it through Congress. There's no way she's going to get the required 60 votes for that, we don't think. And, it's one of those policies that is very hard to implement for what is a very relatively little payoff. If we think about the inflation data at the moment, it's showing us that food prices, although they are now much higher than they were 4 or 5 years ago, they're not really rising at a strong pace anymore. So it seems like one of those policies that sounds good on the circuit, but when it comes to being in power, suddenly it would be dropped quite quickly, I think, in favor of the other policies such as the child tax credits or trying to do more to boost construction.
Well, you've had this policy of giving first-time buyers $25,000 of down payment support. I wonder whether you think that'll inflate house prices.
Yeah, I mean, I think this is one policy we've seen around the world in various guises before many times. And essentially, if you have supply constraints, it's quite tempting for politicians to think, oh, how can we improve demand for those who are not able to buy a house? But ultimately, after a couple of years, the prices just go up to reflect those new policy proposals. So I think that part of the construction policies alone wouldn't be a great thing in isolation. But she does seem to be trying to pair that with an aim to build 5 million homes. I think it was, maybe it was 3 million, but in any case, a lot more homes than the US is currently building at the moment per year. So there does seem to be an acknowledgement that you can't solve a housing problem just with policies on the demand side. You do need to increase the supply of, in particularly, smaller starter homes that are more affordable for first-time buyers.
And in the background, we've had this raft of US economic data, recession fears seeming to ebb away somewhat. I wonder whether you think that a strong economy is actually bad news for Donald Trump. Yeah,
I mean, this is definitely a mixed one for us, because I think going into, at the start of this year, the economy was proving extremely resilient. It kept up surprising to the upside of everyone's forecast. Yet President Joe Biden obviously got very little credit for that at the time. So then you have to ask yourself, well, if the economy did suddenly deteriorate, would that really affect the incumbent, particularly when it's, Kamala Harris is one step removed maybe from the policies implemented under Biden. I think the key point for us maybe at this point was, we're in the middle of August now, 2.5 months to go before the election. Is the economy really going to deteriorate that badly in a couple of months, even if there is a recession, that it's going to have a huge effect on voters? Maybe not at this stage. I would suspect, the debate in September and then the last couple of months of campaigning, and in particular, if we see anything more on the border, maybe is going to be what matters for those swing voters.
Well, as we look ahead to Jackson Hole, given that state of the economy, do you think 50 basis points is off the table?
Yeah, I mean, our view has been it's 25 basis points in September. I mean, even when we had the July employment report and we hadn't had any of the following more encouraging data, looking at that report, we could see that there were a big jump in temporary layoffs that was probably going to be partly reversed this month. I think, and since then we've obviously had more encouraging activity data. The retail sales data, in particular last week, were very strong. And I think not least we've heard from Fed officials now who are, they're voicing concern about the labour market, which they should be, given that the unemployment rate is now already above their year-end target. But they're not, voicing enough concern to make us think that they're going to suddenly take a very rapid approach. The problem with a 50 basis point cut in September is that the markets are automatically going to price in another one in November and probably an increased chance of even steeper rate cuts further ahead. And right now, that's just not what the Fed's going to be wanting to see priced in, particularly given how quickly the equity market has recovered from its kind of low a couple of weeks ago.
And Jackson Hole, of course, a big opportunity to discuss the broader questions of monetary policy, which I know you think about. Do you think that the inflation target should be higher, for example? Do you think that they should perhaps change the target to a range, Stephen?
Yeah, I mean, I think the problem with raising the target is that you obviously can't raise the target until you've met the original target. Otherwise, you'd lose all credibility. In generally, I think raising the target probably isn't the best idea. We've seen anyway historically, even though the targets are supposed to be considered symmetrical, I think it's probably more so going forward, given demographic changes, global fracturing. It's going to be a bit more lenience to the upside. And if you raise the target to say 3 or 4%, suddenly the lenience takes you higher still, right? I think there probably is something to be said about a target range, though. Again, we see that in other countries. Not least Canada, for instance, is a 1% to 3% target range. And it does give policymakers just that extra bit of flexibility to say, well, look, we know we're not at 2% inflation yet, but we're now below 3%. We're heading in the right direction. We can start putting that a little bit more emphasis on the labour market and maybe cut, even if it's just a couple of meetings before, avoid some of this recent volatility we've seen, particularly over the question of whether the Fed should have already cut in July. So, I think that's one potential fix they could do. Although for now, given that we're still above the inflation target, that's probably going to be a discussion for next year rather than this year.
OK, well, maybe we're setting the essay questions for this year's conference. Just finally, we're getting a raft of earnings this week when it comes to the US consumer. We've got Target, Macy's, TJX Cars, of course, the TJ Maxx owner. What's your read on the strength of the US consumer, the biggest driver of US economic growth, of course?
Yeah, I mean, so far this year, we've certainly seen some concerning signs. So, for instance, delinquency rates have picked up quite sharply. And obviously, the fact that the unemployment rate is rising, even though it's not due to weaker employment, it's still telling us that new entrants to the labour market are finding it tougher to find a job, which is probably why we've had consumer confidence look very weak. I mean, that all being said, it's not clear that that's yet feeding through to weaker spending. So the retail sales report last week were quite strong. Obviously, we had Walmart earnings as well, looking pretty good. So it's, even within that lower income group that are maybe being hit hardest by a combination of high prices and high interest rates, that hasn't fed through to weaker spending yet to the same extent as we might have expected. So our sense is that consumer spending growth is going to slow a bit further over the second half of this year in response to some of the kind of recent loss of momentum we've seen, some of the economic indicators. But our base case is still that the economy is heading for a soft landing this year with growth, GDP growth below potential, but certainly on the kind of north of 1% rather than heading down towards 0%.
All right, an optimistic note to end on. Stephen Brown, Deputy Chief North America Economist at Capital Economics. Always great to have you on the programme. And for more on the race to the White House, we're going to be speaking to the former US diplomat Brett Bruen about some of the tough challenges facing the candidates. He is going to be joining at 8:30 a.m. London time. But coming up right here, what to watch from the Fed's annual meeting at Jackson Hole. We'll speak to Isabel Albarran from Close Brothers Asset Management. So do stay with us for that conversation. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, investors are turning to the Fed's annual gathering at Jackson Hole this week to see how recent data on the US economy is going to inform the central bank's path on interest rates. Fed Chair Jerome Powell's keynote speech on Friday is widely expected to confirm cuts from next month. And joining me now for more is Isabel Albarran, who is investment officer at Close Brothers Asset Management in London. Isabel, good to have you with me on the programme. Looking ahead to Jackson Hole, we've just had Stephen Brown telling us that Jay Powell can pull off a soft landing. Do you agree?
I do. And I think, we've seen certainly some easing in the US market, but it's easing, not a collapse. And, that's why we're still expecting to see sort of steady and stable being the kind of watchword for the Fed. Very much a focus still on incremental easing.
So do you think that the market pricing for Fed cuts beyond September is too aggressive then?
It looks somewhat demanding. I mean, we've already seen a big reversal from the sort of surge in cut expectations we saw for September. And I think we might expect to see that echoed a little bit further out in the curve. So I think it's 200 basis points expected over the next 12 months. Given that we're not seeing a collapse in economic data, that seems a little bit demanding. That being said, the Fed do have quite a lot of space to do some cutting without making the policy stance accommodative, just because, rates are pretty high from a sort of R-star perspective.
OK, interesting. And then on the fiscal policy, we had Kamala Harris's economic plans dropping on Friday. What did you make of them from the investor standpoint?
I think it's very much a case of evolution rather than revolution here, thinking about what was announced. So in total, it's perhaps a smaller package than we might have expected, but it is going further than what the Biden administration had tried to pass. And thinking about where the focus is in terms of kind of total package size, probably over the next decade, about 1.7 trillion. The bulk of that is going on this child tax cut extension, sort of sending a message there. But in terms of their economic impact, I think that may be a little bit more limited for a couple of reasons. First of all, as I mentioned, you've got to pay for it. So the size of this package is not particularly enormous compared to the numbers we were perhaps thinking about beforehand. Secondly, you need to be able to pass it. And even if we do see a Democratic sweep, you still need senators to vote for some of these policies. And then thirdly, you've got to implement it. And on some of the areas around, for example, housing, so trying to increase the amount of houses built really dramatically, reforming planning in a way that makes that possible is not going to be a slam dunk. So the ticket size for the package is smaller. And then I think the actual economic impact of that is likely to be a bit more modest again.
OK, really interesting. And parallels indeed with the Labour government in the UK and its plans to build houses. I just wonder about the UK economy. We've had this raft of data last week. The economy growing, you've got benign inflation, you've got wage growth slowing. Does that sound like a healthy economy to you, a good place to put your money?
Well, certainly the outlook for the UK has improved, and it's expected to improve further in the second half of the year as we see that pressure from high inflation beginning to, soften and allow the consumer a little bit more space with their spending. And then also looking at measures like the property market, seeing a bit of a recovery in confidence, a bit of a recovery in sort of certainly buyer sentiment. That should feed through to house prices and eventually to consumer confidence. So certainly a slightly better outlook. From a global investor's perspective, it's been interesting because over the last kind of 2 or 3 months, we've seen a lot more interest in the UK. The question is, to what extent does that relate to the fact that we've seen, political turmoil in Europe, and to what extent is it actually a reflection of beginning to re-rate the UK from a political risk perspective? I think the Labour government are going to have to do a lot more to improve sentiment in a more sustainable way, and also improve the kind of growth path for the UK economy for that to happen.
Okay, really interesting. Isabel Albarran, Investment Officer at Close Brothers Asset Management. We thank you, as we do mind that picture in the UK and the sentiment changing towards UK equities. We're going to get more data that could change that sentiment this week. We get a raft of European PMIs. Just a couple of charts on that data. If you look at this next chart, you've got the UK economy actually, as Isabel says, not performing that badly, but Eurozone manufacturing PMIs having been pretty soft. The UK, the red line on that chart. And if we flip the board, you can see the aggregates for the regions, if you break those down, are actually showing that services are holding up, but manufacturing is still pretty soft. But there, you can see broadly across the region the comparison between the companies. We've got plenty more coming up on the programme, so do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, we were just hearing there from Isabel Albarran referring to the pullback in Fed cut bets. So as we start this new week, let's check in on where they're at. Swap market pricing now implying around 30 basis points of easing next month, about 93 basis points by the end of the year. And that compares to earlier this month when you had traders pricing more than 150 basis points of cuts for the rest of the year. So do mind this chart as we get more commentary out of Jackson Hole and the Fed minutes and the eco data out of the US, lean as it will be throughout the week. If you flip the chart over, you can see there economic data has been soft out of the US, labour data rolling over. But if we flip again, signs of strength in the short term out of the US. We've got futures pretty flat as we head towards the cash open, but that does it for me on Daybreak Europe. I've been Lizzie Burden in Dubai. And next up, you've got the opening trade with Kriti Gupta and Guy Johnson. This is Bloomberg.